In many ways, I still believe that this process of approving the ETF and having BlackRock be the biggest has ties to an ill-fated, I will say, attempt to control the markets, right? I don't know if you've seen the clip of the guy who runs the Chicago Mercantile Exchange saying, "We'll tame Bitcoin." I believe the original plan was they were going to punt everybody else, give BlackRock the go-ahead. BlackRock was going to accumulate these big positions. The banks, the JP Morgans, et cetera, would take the other side, short the futures.
There was a lot of excitement last year when the biggest asset management in the world suddenly showed an interest in Bitcoin, the most famous cryptocurrency in the world. From the moment it was established, Bitcoin stood in stark contrast to all that Wall Street stands for. Nevertheless, BlackRock bridged the gap by applying to the SEC to form an exchange-traded fund leader focused on spot Bitcoin. Even Bitcoin's former detractor Larry Fink has spoken highly of the top cryptocurrency, saying it may protect investors from currency debasement and is a worldwide asset. All the more reason to get pumped up after reading this description. Fink described a Bitcoin rally a few months later as a flight to quality in another interview, and he didn't stop there. He said that cryptocurrency demand was high and unfulfilled everywhere in the globe. True to his pledge, Fink has continued to provide strong support for Bitcoin and cryptocurrency since then. Mark Yusko, a famous hedge fund manager, is skeptical about Fink's true intentions. A recent interview with Sin City Crypto featured Morgan Creek Capital's founder and chief information officer, who spoke about allegations of a plot involving the SEC, BlackRock, and other major financial institutions like JP Morgan, firms that have been named as authorized participants to manipulate cryptocurrency prices through deep infiltration. Because they have been designated as authorized participants, these companies have been named. According to Yusko, the CC would have delayed the acceptance of our applications to a later date and only approved BlackRock's application if the process hadn't been so heavily publicized and subjected to court orders. After this, we will give you snippets from the interview where Mark Yusko analyzes the Bitcoin ETFs and how the destined to fail plans were foiled. It would mean a lot if you could enjoy the film from beginning to end, rate it, and then share your opinions in the space provided. You should subscribe to the channel and activate post alert if you would want to watch more videos with Yusko and other famous investors and experts. Thank you for tuning in. As time goes on, every commodity with a futures component is often swayed by the opinions of those around them. Back in the day, I needed legal ownership of the oil in a barrel before I could sell it to you. The oil's legal ownership was a prerequisite for my selling it to you. My ability to go on and make that real barrel of oil and deliver it to you was absolutely crucial. In order to complete a deal with me, you must be able to receive deliveries. Afterwards, they crafted the future universe. These days, I can make an oil barrel out of paper if I want to. There is absolutely no need for oil to be present. Rest certain I will deliver oil. I won't have to track down the oil, pay for it, load it onto a tanker truck, and then ship it to Chicago if we settle the deal before the deadline. None of it is necessary for me to accomplish. The opposite side will reveal that you have undressed your undergarments. For extended periods of time, you can remain nude. That innovation allows you to create a big quantity of paper barrels, seemingly from thin air. All of these commodity markets experience a severe supply-demand imbalance as a direct consequence of the manufacturing of these paper commodities. The widespread availability of paper commodities causes this disparity. You have seen it happen in the oil markets. You have seen it in the grain market. This is something you've seen before in the gold market. Everyone knows this to be true for the gold market. The power to influence the gold price lies with the London-based financial institutions JP Morgan and Rothschild, who own numerous short positions. The short holdings held by Rothschild Bank and JP Morgan simply cancel out many of Gale's long positions. To me, the most endearing part is that they are avoiding that, actually. JP Morgan came clean about it. Their response is fascinating, even though they paid a $960 million fine, roughly $1 billion 2 years ago. They make a statement that sounds like this: yeah, we paid the fine, but we didn't have to plead guilty. To this day, I still adore it, although it is possible to pay $1 billion without admitting guilt. This is more of a business expense when weighed against the $20 billion we made. From what I can gather, the original plan was to sanction BlackRock while they punted the other teams. A large number of positions were likely to be amassed by BlackRock. On the other hand, banks like JP Morgan would go against the grain and short the futures. Some believe the launch was a failure because this happened within the first week, but there are other reasons as well. People had already come in before that. From $40,000 to $47,000, we saw an increase in revenue. We witnessed a breathtaking parabolic climb. The launch followed an intriguing occasion that was underreported in the media. Even after I tweeted about it, no one paid attention. A second futures contract was offered to the market on January 11, the same day that the ETFs were approved. It was precisely on this day when this incident occurred. Shares led to their liquidation, and there were many people shorting futures against these longs. Not everyone had a problem with their taxes. Some even said, "I'm out and I'll transfer." A number of factors came together to cause the price to drop. People are thinking, "Oh my God, it's a failure." I can tell you right now that you are missing the big picture. It is you who raised the issue. In the end, every single one of these organizations, Fidelity included, has promised to add 1%. The plan is still too risky, say Vanguard, Bank of America, Merrill Lynch this morning, and UBS, who have all previously expressed their disapproval. This code indicates that Mess Warren requested that they not allow your customer to speak by calling their number. When you look at where the money for Mess Warren's campaign is coming from, you'll notice a remarkable similarity to the biggest financial services companies in the nation. Nevertheless, in spite of the claimed conspiracy amongst these prominent financial organizations, the US-based cryptocurrency organization Yusko is confident that spot Bitcoin ETFs have been and will be good for Bitcoin and, by implication, other cryptocurrencies. Our lawmakers, regulators, and service providers all hold this view. At least one of the $30 trillion in assets managed by financial advisors will be put into Bitcoin, according to one of the most prominent hedge fund managers. Although he admits that things may proceed more slowly than expected at first, he expects things to pick up speed significantly in the following year or two. One example is Fidelity, which just announced that one of its conservative all-in-one ETF will be invested in Bitcoin. Bitcoin has accomplished something very remarkable, and many other institutions are expected to follow suit in the near future. Take a look back at the interview that Yusko ran. However, according to Eric Balkunas, my guess is that in the grand scheme of things, he did the math and came up with a conclusion that advisors at these huge allocation businesses manage $30 trillion. An asset that trades at $10 billion daily could potentially be invested with $300 billion if just one of Bitcoin were held in exchange-traded funds, RUWHS. That will play a major role in determining the final price. The further integration of Bitcoin into financial services in the long run will also be helped by this. The most important point, though, is that it will spend every last bit of the additional supply that comes from mining coming years. I have made a bold claim, and even if it turns out I am wrong, I still stand by it. I think 2024 will see more fiat money conversions to Bitcoin than the past 15 years put together. The market is worth more than $900 billion right now, so this forecast isn't completely out of the question, but most of that money isn't coming in. By the time its price hit $10,000, GBTC had already received about